All right. Welcome back, everybody. Happy New Year. Welcome back to Liquid Lunch powered by CryptoQuant, your go-to solution for on-chain data analysis. And we're excited to be back. Julio, Happy New Year. Glad to see you're in your Hawaiian gear.
Hi, Garrett. Yeah, Happy New Year to you too.
But lots of exciting things happening just right after the new year. We've got First of all, we got the 15th anniversary of the Genesis block, which everybody has been, kind of celebrating on Twitter and all over the place. And then we also have some crazy volatility heading into, this 2024 halving. And so, yeah, any thoughts on the recent price correction there, Julio?
Yeah, we actually, we saw yesterday Bitcoin price going as low, as going down as much as 10% during the day, right? Of course, it was, some market talk about related to a report that said that maybe the ETF won't be approved on January. We'll discuss that, of course, with James. But just to put it into context, we've been saying basically for the last few weeks that it seems that prices may need a correction, and so we've been basing this in our on-chain metrics, and especially what we're showing here is the profit and loss margins for short-term holders. We like to see this metric because it tells you what, like, when prices are increasing too fast, right? And you can see these in the red circles. When this metric goes, it's around 40% of profit margin for short-term holders, which tend to be like the traders, right? The traders that are speculating on the price. And so we had since December, going up this metric to about 40%. And then that's why when we started to tell and put in our reports, like, maybe prices are in need for a correction, right? And so we are right there. It has come down a little bit, but still, there's a lot of unrealized profits to be made by selling by traders. And so that's just one of the flags that we have seen. Some of the alerts that we have seen trigger after prices last year went from 16,000 to 45,000. So that's a lot of unrealized profits in the market. So that's what we're seeing, and we just wanted to point this out. And of course, it may be related to the ETF approval, right? People wanting to take some profits after the approval. That's what we're seeing, maybe. And so, yeah, that's just interesting to keep an eye on these type of metrics, to assess that risk.
Yeah, no, this is a great chart. And again, you nailed it. You nailed this one, and a great presentation on what this actually means. And so if you guys are not familiar with CryptoQuant yet, go ahead and head to our website, cryptoquant.com. Go ahead and sign up for an account and let us know. Get in touch if you guys are an institutional client that needs, API access. We've got a ton of different features. And Julio here, our head of research, puts it together a ton of market research. And so, no, this was awesome. Thank you for sharing this with us. But I'm super excited to get to the next part of today's talk, which has an introduction to James Seyffart from Bloomberg Intelligence. Thank you, James, for coming here. How are you?
Hey guys. Thanks for having me. Happy to be here. It's been a
I
while.
see you've got your Hawaiian shirt on. So thank you for enjoying the vibe with us. Are you drinking any beverages this morning as well, or?
I'm drinking a homemade cappuccino.
Homemade
But
cappuccino.
yeah, no, nothing else in there, just water and coffee, but homemade cappuccino.
Awesome, brother. Well, hey, I figured we'd start this off with just kind of giving everybody like maybe some background on you, like when you first got into crypto, maybe. How about we start from there? Like, when did you first get into crypto, and like, are you a Bitcoin maximalist? Where are you at with the whole Bitcoin versus altcoin thing?
I'll try to keep this as short as possible. So I am not a Bitcoin maxi. I will say though, I am like Bitcoin first, the way I think about things. So like I think we'll just leave it there. I'm not a Bitcoin maximalist. I'm also restricted from holding most of these things, so I can't cover these for Bloomberg and really trade or invest in these too much. I do have some that I've bought long ago, but I'm not really allowed to trade around it anymore. That said, I mean, do you want to get? There's two ways to describe this. My first experience with Bitcoin was a negative experience. And it was way back in 2011, the spring of 2011. I had a suite mate in my college dorm room who downloaded Bitcoin mining software on my laptop because I said it was fine and he could use it to get this internet money that he was going to use on this website to buy things, aka Silk Road. Which I'm convinced my laptop blew up. I literally lost like a 12-page paper like a week or two later, and I'm convinced it's because of stuff he was doing with the Bitcoin mining software. But yeah, my former suite mate Mike, that was my first experience, and I dismissed it like everyone else. I feel like everyone's story is the same. You hear about it first, and then you dismiss it. But then I was at a traditional finance conference in late 2016-ish, and Kathy Wood was giving a speech, and they wrote a white paper on Bitcoin, not the Bitcoin white paper, but they wrote their own white paper on why they thought it was significant. And that's when I've really got involved again and started looking at this thing. And then, so I used to be in Bloomberg's data department doing a lot of the back end infrastructure stuff for funds, mutual funds, hedge funds, you name it. And then in 2017, I moved over to Bloomberg Intelligence, which is our research arm. And I worked with our commodities analyst and our ETF analyst, Eric Balchunas. And basically, our commodities analyst was like, we need to start covering crypto. Do you know anything? And I was like, oh, I've gone down this rabbit hole. So this was like October, September of 2017. So I was part of the team that like brought up our coverage on cryptos initially. And then I became a full-time analyst covering ETFs, and that has put me squarely in this space that we're talking about here. But I've spent the last few years doing a lot of coverage on those grayscale products, international crypto ETFs, things like that. So a little more
Nice.
long-winded than I wanted to be, but I feel like I have to point out the fact that I had mining software on my HP computer in my freshman year of college.
No, that's awesome. I mean, I think a lot of us first get into the ecosystem with a negative experience, but it's kind of the number go up technology that always kind of brings us back. So, but 2011, that's early. Wow, that's pretty cool. That's pretty awesome. But okay, so everybody's confused with this ETF, right? Everybody's like, there's all these players in it. There's all these applications. They keep going back and forth. Well, can you give the audience just like a 40,000-foot background of like, hey, who are the players in this thing, and like what's kind of going on, just from like a background of everything?
Yeah, so the players in this thing are the largest asset managers in the world and some of the biggest players in the traditional financial markets. Period. Stop. Like it is the who's who of the traditional financial markets. I mean, we just saw a story yesterday. We can get into what the APs actually mean, but Goldman, JP Morgan. If you're not in traditional finance, you might not know this, but Jane Street and Virtu are two of the biggest trading firms in the world. They're all like kind of on this as like third party participants of these products. And then you have Fidelity, one of the largest asset managers in the world, BlackRock, who is the largest asset manager in the world, Grayscale, the largest crypto asset manager in the world, and then a bunch of other firms that are also big. Invesco is partnered with Galaxy. I mean, these are a who's who of the TradFi, and in some cases a who's who of the crypto world, trying to launch these things. My base case for since basically August was that the deadline that really, actually July, I have tweets to prove it, since July has been the deadline that matters is January 10th. And I mean, what are we, 6 days? I don't even know what's today's date.
Yeah,
We're,
Fourth, yeah.
today is the 4th.
yeah, so we're 6 days away from this final deadline. Beginning of December, we narrowed things down to January 8th to January 10th. Those are the days that I think we could see these approval orders. Theoretically, it's possible to see them before that for some of these ETFs. I think tomorrow is possible. I think today is very unlikely, but I'm zeroed in on January 8th to January 10th that we could see these things approved. But again, it really is a who's who of the traditional financial world, trying to get these things across the finish line with the SEC.
Oh,
So
go ahead.
just one question, because we hear a lot of names, right? But everyone is doing a different in a different thing in the ETF, right? Can you just clarify that, like the issuer, the authorized participant, like there's a lot of names and they do different things or will do different things. Can you just clarify for us?
Yeah, so the main things that that would matter to anyone who's really going to do a lot of due diligence on these things is One, what is the fee, which I don't really need to explain. That's the cost that you're going to have to pay to hold this thing on an annual basis. The issuer is the person who is launching this product and managing the product. So that's the BlackRocks, the Fidelities, the Invescos, the Bitwises, Valkyrie, Hashdex. I'm forgetting some and I feel bad, but there's too many to name. Uh, ARK and 21 shares. Though they're going to be operating the fund, right? So they'll be the ones that are actually operating these funds and holding the assets. And then they'll have custodians. The custodians are the people that are just going to actually hold the underlying assets. In this case, Coinbase is the primary custodian on 8 of the 11 that I'm focused on. But you also have BitGo as a custodian for Hashdex. You have Gemini as a custodian for Van Eck. And then you also have Fidelity has a subsidiary that's going to be the custodian for their own product. So those are the people that are going to technically be holding the underlying asset. There's also something called transfer agent, which we don't need to get into that much, but those are also going to be big banks that are involved here in the operating the plumbing on the back end. And then authorized participants, again, that's more the plumbing on the back end. But the way I don't know how far we want to go down this rabbit hole, but the reason an ETF is so efficient and why so many people, why they are such a great technology and structure is because usually at the end of the day, what you can always do is you can exchange the underlying asset for shares of the ETF. So in this case, you can always essentially exchange Bitcoin for shares of the ETF. So at any point, if those two prices diverge, you can always bring it back in line, because if the ETF is worth way more, you're going to sell that and buy the underlying asset. And since they're equivalent, that's an arbitrage opportunity. So basically, just the natural mechanisms of the market are going to keep those things tightly in line, which won't create the issues that we've seen with these grayscale trust products, which were great for people who wanted access to this thing in certain brokerage accounts or tax advantaged accounts, or you wanted to trade in the traditional financial markets. But this will be a much better solution and will be better than Bitcoin futures products. Now, I say that because APs, authorized participants, are the people that will actually be facilitating that process of creating new ETF shares or redeeming or destroying ETF shares. So the AP is the person, typically it's a big bank or brokerage trading desk, a broker, what you name it, market makers. The people that trade on Wall Street are the people that tend to be APs here. So the APs we have named here is Jane Street, Virtu, JP Morgan, which is ironic with Jamie Dimon's hatred of crypto, Cantor Fitzgerald, who is, we now know, holding most of the assets for Tether, apparently. And then we heard there's a lot of rumors that Goldman is also going to be an AP here. So these are the people that facilitate that arbitrage mechanism that allows ETFs to be such efficient trading vehicles for pretty much anyone involved.
Now, the approvals have been kind of a wild ride. I mean, you've got Gary Gensler at the SEC, who's kind of, basically using his power to go after the securities, right? Some of the altcoins, but he's not really giving any clarification on anything. And so what do you think is going on there? And do you think like we'll get a delay again, possibly to March?
No shot of a delay, in my opinion. Not no shot, but very, 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 very slim. Look, this has been ongoing for 10 years. You had the Winklevoss twins that tried to file for this thing back in 2013. Granted, there was no way that application was going to get approved, which you don't need to get into why. The market wasn't sufficient enough. There was a lot of issues with the actual structure behind it, but it was never going to happen. Since 2020, I think we could have had these things approved realistically. And we have Hester Peirce, who is a commissioner at the SEC, who has been dissenting on the SEC's decision since then for denying these Bitcoin ETFs. Now you have the Grayscale decision where the DC Circuit Court of Appeals, basically you have these checks and balances in the US government that are saying like the SEC has gone too far here. You've acted arbitrarily and capriciously. And then another key aspect. So I think that the Grayscale court decision is critical. You have BlackRock entering here, which again, largest asset manager in the world. You have Coinbase signing on to do surveillance sharing agreements, which should satisfy some of the SEC's concerns, but I don't even think that's necessary anymore. Basically, what the court said is you've allowed Bitcoin futures to ETFs to operate. You are acting arbitrarily and capriciously by not allowing spot Bitcoin ETFs, because fundamentally they're the same thing. They're both tracking an underlying asset, and you're allowing a derivative of that asset and not the actual asset to be in an ETF wrapper. So basically, the SEC, in my view, has been backed into a corner. So even if Gensler and the SEC didn't really want to approve this, because of all the work from all these issuers and the Grayscale court case and a bunch of the other facts I just laid out, they're kind of backed into a corner into approving here. So the only options here are for why we wouldn't get an approval. There's a few things I'll lay out here. One, which again, I think we're at 90% odds that we see approval within the next week, essentially. One is they convince ARK and 21 shares to withdraw their application. So the reason January 10th is a key deadline is because ARK and 21 shares, these 19B4 processes, which is the thing that you file to get a rule change. In this case, the rule change is we want to trade Bitcoin ETFs on our exchanges. The SEC has to approve that. And the way that works, there's a bunch of deadlines. And typically the SEC, there's 4 deadlines. And the SEC at the first 3 deadlines can either approve, deny, or delay. But by the 4th deadline, they can only approve or deny. That 4th deadline for ARK investment and 21 shares dual application is January 10th. So the SEC is either A, going to have to come up with a new reason that they have not issued for the past decade plus of denying these ETFs, which again, I would argue is arbitrary and capricious on itself because you've been denying these ETFs for all these reasons. Court said those reasons don't matter anymore, and now you're coming out with new reasons. So I think that's highly unlikely. I don't think that's an option for the SEC. The other option is get them to withdraw, in which case, again, I don't think that's likely because the SEC's backed into a corner here. I think they have to approve. But if you can convince Cathie Wood and Ophelia Snyder at 21 shares to withdraw their applications, theoretically, they would be getting some sort of guarantee that they would get approval in the first wave, which would push things to March. Again, I don't think that's happening because I don't see why anyone would ever do that, right? And then the third option, which is the one I'm like kind of worried about at the back of my mind, is like somebody going nuclear, like Gary just kind of doing, I guess denying would be going nuclear, but it would be like the Biden admin stepping in with some sort of executive order of movement to really stop these things, which I don't think that's going to happen either. So these are super huge tail risk events. So I'm pretty confident that I think we'll see approvals. And in order to see these things listing, you need 2 things. You need that 19B4 approval order on every ETF that's filed. And you need these, they're called S1s, but they're prospectuses, offering documents, registration documents, a bunch of different names. But you need to see those S1s become completed or effective or approved by the SEC. So those 2 things. And then once that happens, we could see these things list in a day or 2 after that.
And also, I wanted to point out, I mean, during December, these participants, the issuers and the SEC were having a lot of the meetings, right? You were tweeting about like 30 or more meetings between them. So, I mean, why would they had so much meetings if these things were not going to be approved, right? I mean, what's your thought there?
Yeah, exactly. So the way those meetings work is it's predominantly with the staff. So like there are people that are put there by elected officials. So the elected officials place people there like Gary Gensler, Hester Peirce, those types of people. But for the most part, it's run by like normal people who like working at the SEC as their job. And we refer to them as the SEC staff. So basically, as far as we're concerned, the SEC staff is full-blown 100% working towards getting these things approved. They're working on those S1s I talked about. They're talking about those 19B4s. They're crossing their T's, dotting their I's so these things can be approved. So like everything the SEC has done for the last 3 or 4 months has been basically gearing up to approve these things. When we went to 90% approval odds in early October so basically a bunch of these ETFs got delayed way before those deadlines I talked about. The SEC came out and delayed like pretty much everyone under the sun. And a lot of people were like, oh, that's it. The SEC is denying them. But we heard rumors and then officially saw that these S1s were coming back with comments and they were submitting amended S1s, which has never happened in the history of these Bitcoin ETF applications, which was a complete break from like the way things normally worked. Then we got the affirmation of the Grayscale case. So the Grayscale won the case at the end of August, early September, but we knew the SEC wasn't going to appeal that by October. So we went to 90% because it looked like this was a complete break from the way that the SEC normally operates. And it's been that process since October of the SEC meeting with these guys, giving feedback on the risks they're disclosing in these S1s, how the trust is going to operate, all these like minutia and fine details that like 99% of people on crypto Twitter care about, but like it really probably doesn't matter. It's just more like the SEC is at this point trying to figure this out. So the amount of man hours and money and lawyer hours that these issuers and the SEC are spending on like doing all these meetings, like it would be a complete waste of time and money for them to then deny. That said, this is the staff. So Gary Gensler's at the top here. So the risk would be that he goes nuclear and is like, no, we're not approving them. I don't care what we've done. Again, I think that's highly unlikely based on everything we've seen. I have not seen any indication that that's going to be the case. So obviously We were early in calling out that we thought this could happen in the summer. We've increased our odds significantly through October, and we've been at 90% since then. And it's fun because when we were saying these things in the summer, people were calling us insane. They were like, there is no shot. There's not this SEC, not Gary Gensler. And now we've kind of become the consensus view. So I guess it'll be a little less painful if we end up being wrong, because everyone else has kind of come around to our way of thinking. But yeah, I just hope that we end up being correct, because we've been very vocal and out there, and I'll have to eat a lot of crow if we get denials next week.
Yeah, so leave that opening for the 10% chance rug pull possibly, but hey, we'll see what happens, right?
Yeah, exactly.
Okay, so what about the in-kind versus in-cash creation, right? Like we always hear about, them changing it. Does this mean like, maybe give us some details on the differences? Does this mean, people that actually buy the ETF won't actually get access to real Bitcoin? What is that in your mind? What's going on there?
So this is one of those dotting the I's, crossing the T's thing, right? This is like real nitty gritty in the weeds, back end plumbing stuff that like there's like 400 ETFs in the US that already operate like this. They already operate on cash create that most people just don't know. They don't understand because it doesn't matter to 99% of people, right? Like at the end of the day, before I get into the differences, all you need to know is that the ETF is going to hold and offer exposure to spot Bitcoin. Period. Stop. Essentially, at the end of the day, it's going to hold spot Bitcoin, right? So what we're trying to figure out is what's going to happen. What this means is just how the actual thing operates on the back end, right? So in a traditional ETF, I talked about it before, you basically hand over Bitcoin, and in return, you would get shares of the ETF. Or an S&P 500 ETF, you would hand over the stocks of the S&P 500, and in return, get a set number of shares of the actual ETF. That's the way most ETFs work. That's the most efficient way for an ETF to work. It's the way all spot commodity ETFs work. The SEC is not comfortable with that for a bunch of reasons that we're trying to kind of guessing at, where we can sort of triangulate why they're not comfortable with it. But what this means is the APs in this instance aren't actually handing over the underlying Bitcoin. So those APs we talked about earlier, the market makers, they're not actually the ones that are handing over the Bitcoin to the ETF. They're just handing over cash. But still, that creation and redemption process happens at NAV, at the underlying value of the holdings of the Bitcoin per share. So if you're handing over cash, you're handing over cash to the ETF issuer. Only select people who are authorized participants on this ETF can do that. They will help that will be the arbitrage mechanism. But instead of handing over Bitcoin, you're handing over cash, or in the case of redemption, you're handing over the shares and getting cash back. What this means is rather than the APs doing the trading and execution of getting the actual Bitcoin, it's the trust itself that has to go out and do it. So they're going to get cash. This is the way most mutual funds operate. If you're a US investor, this is the way most funds operate in general for the most part. Basically, they get the cash into the trust or the fund, and there's a trading desk that goes out and executes and gets the underlying asset. So in this case, it will be a trading desk that's associated with BlackRock or Bitwise or ARK or VanEck, who you name it. They're in-house. They have to go out and get exposure to Bitcoin if there's an inflow, or if there's an outflow, they have to sell Bitcoin and deliver cash to the authorized participants. So the only difference is that actual process, that this adds a little more steps in the process because of what's going on, but it also might differentiate the ETFs better. If theoretically, if some ETF has a much better execution process for getting exposure to Bitcoin, they could outperform competitors theoretically. So that'll be something to watch, but really it's just back end plumbing stuff that 99% of people shouldn't care about, but the SEC cares about it for KYC, AML. They don't want brokers and banks touching Bitcoin. There's a whole bunch of different reasons we can get into if we want to go down that rabbit hole, but the SEC, for whatever reason, is not comfortable with these banks and these broker dealers touching Bitcoin right now.
And a question about that, just a question about when you redeem, do the issuer has to sell the Bitcoin, or can they just hand cash from other source and keep the Bitcoin, or how would that work? Or they are
yeah, so they would have to sell the Bitcoin. So like theoretically, the way most mutual funds work is they have what we call like a liquidity seed. They'll have a little bit of cash in there or some treasuries, stuff that's like super, super liquid. I don't think the ETF will have that. So it's likely going to be that they're going to have to sell the Bitcoin and then get the cash and hand deliver it over to the authorized participant. There's like some stuff with international ETFs where they have cash on hand or they have credit lines where like they can meet redemptions because the markets might not be open. But that's not going to happen with the Bitcoin ETF because Bitcoin is constantly trading. So when these ETFs are trading and you can create shares or destroy shares, they'll always be able to trade Bitcoin theoretically. It's just a matter of how good their execution is. So yeah, the ETFs will hold Bitcoin but they will deliver cash or receive cash.
Now, in playing devil's advocate here a little bit, right? Bitcoin was meant as a peer-to-peer cash system, right? It wasn't really intended for the purpose of Wall Street, big hedge funds, getting access to this asset and that sort of thing. And so, like, what, and we had the FTX collapse, right? We had institutions collapse because they didn't have the Bitcoin that they said they had. And so, let's be honest, there's been a lot of fraud with the gold ETF, with the spoofing and with all these other things that have happened. And so, do you think there's potential for fraud with this ecosystem as well, in regards to the Bitcoin ETF, or is it minimized because, you have to actually verify Bitcoin on a balance sheet? You can't like make it up, right? Because it's all public.
Yeah, so the gold for the most stuff, gold ETFs really haven't had a problem. It's more so the banks have manipulated markets via futures and different other things, right? And typically it's much more common in lesser known metals essentially in spot markets. But that said, like this is such like compared to something like FTX, the potential issues that could arise and the amount of like holes that could happen are so small. Like it's kind of like the Swiss cheese process where like, yeah, if you have one layer, there's something can fall through those holes, but you black up 10 layers on top of that. And there's just no way that you're not going to get caught. Essentially, there's so many third parties that will have their hands in the cookie jar, if you will. There's auditors, there's custodians, there's fund administrators, there's transfer agents, there's authorized participants. Like there are so many people involved here that it's not like it's not like the Bitcoin's not going to be there. Now, I mean, can it be hacked? I guess that's more likely and possible, but it's not going to be like this is paper Bitcoin and it's not actually there. I think that's one of the ways that some of these issuers are going to differentiate themselves. You're going to see some of the smaller guys, I would guess, who are trying to compete with BlackRock and Grayscale, that will say, look, here's the addresses where we're holding all the Bitcoin for this trust. You could verify it yourself. We have this much in assets. Here's the Bitcoin addresses. I think some won't do that. They might call it, they won't want to do security concerns for whatever reason. They might not want to release that information. We know for a fact, like Grayscale has never released that, but some others have. And honestly, it's probably going to be multiple addresses. I doubt it will all be on one address potentially, especially if you get large. And I also think that right now, everyone has only named one custodian. I think we're going to see these ETF issuers diversify, and they'll have multiple custodians, and those multiple custodians might have multiple wallets. And some of these issuers might not tell you what it is, and they're just going to be like, you have to trust us. And some people are going to say that's not good enough. And then other issuers are going to say, here, look on chain, you can see that we're holding the Bitcoin that we say we're holding.
Yeah,
Yeah, because the custodian is Coinbase. Coinbase doesn't do proof of reserve, so I don't see them getting the addresses public, really.
Well, you could see. So basically, it's like we have Osprey, which operates a Bitcoin trust that's much smaller, but it competes with Grayscale, and they've released their holdings, and they're with, I think their custodian's Fidelity. But I mean, it doesn't. These people, it's going to be up to the issuers whether or not they want those released. So Grayscale, for whatever reason, has not released the address or addresses that they use for GBTC, but Coinbase has issued multiple filings and reports confirming that they do indeed have the Bitcoin on their balance sheet. There's auditors involved there. There's a lot of different people. That said, if you are not comfortable with an ETF that's not saying where their holdings are or what the Bitcoin addresses are, like I said, I'm fairly confident that some of these guys are going to release that information because they're going to want it'll be a way to market themselves and differentiate themselves. Same thing happens with like gold ETFs. We talked about them a bit before. 90% of the gold ETFs, 99% of the assets, or 95% of the assets are stored in vaults in London, right? And so for the most part, I don't know if you know anybody that could tell you this, but like they don't know if they're owning a gold ETF on their brokerage platform, they don't know where the gold is stored. They just know it's a gold ETF, but there is a gold ETF out there that stores in Swiss vaults. So like that's one way they differentiate it. They are not the largest or the most liquid, but they have their gold stored in Swiss vaults rather than London. There used to be one that was stored in the Perth Mint down in Australia as well. That has since moved, I believe, to London, but there are differentiated ways, and we're going to see ways that these Bitcoin ETF issuers try to differentiate so they can have a successful product.
Interesting. And so, you know, what happened the other day with that Matrix report? I'm sure, you know, what was that? That was actually yesterday, right? And so we had BlackRock talk about seeding their ETF with 10 million, and then we had a 9% dump with this Matrix report that was seemingly kind of bullshit. I don't know, what's your opinion on like the news that makes these pump and dump stories happen all the time?
Yeah, I mean, first of all, part of that what had to do with like a leverage washout, like funding rates and all these different things on the derivatives market, and that I think that like sparked it when the block covered it. So the block took this Matrix report and wrote an article about it. That said, my phone blew up that morning. Yeah, I guess yesterday morning, and I was like, it just feels like days ago at this point. But like, I was like, oh shit, did we miss something? Like, let me look at this, and then I looked into it a bit more. We just completely disagree. I mean, to be honest, some of the things that they wrote about there that they were concerned about and were focused on is things that we were talking about in July, like 6 months ago at this point. And we've since been asked and answered, and we've gotten way more confident in talking with people. I was concerned they had sources. It was just an analyst saying like, I just can't, like, I don't understand this, which he's not alone. A lot of people still think these things are going to be denied. They used to be the majority. Now they're the minority. So it's not that crazy. It's just that the report didn't really, they didn't add anything new. There was nothing we didn't know. And honestly, it got a couple of things wrong. But for the most part, it didn't change our view at all. Once I saw what the actual report and the substance of the report, it hasn't changed our view in the slightest.
Yeah, well, I think it was the same day they said, you know, Bitcoin was going to 50K on the ETF approval. So it's like they sent a mixed message anyway.
Yes. Yes. They had two reports. They had one report say that it was imminent, it was going to 50K, and then another report that said it was going to be denied. But I think those were two different analysts. So it's just
Yeah.
one analyst giving his view and his opinion. There's nothing wrong with that. I think it caught fire for whatever reason and caused a little bit of selling, and it wiped a bunch of people out that were over levered.
So is the final approval going to be a sell the news event, do you think, or are we going to get super bullish here? What do you anticipate is going to happen to the price when this does get approved?
So I'm not actually allowed to talk about price specifically. Like I'm literally restricted from doing it. That said, I don't know. Honestly, anyone acting like they know exactly how this is going to play out doesn't actually know. You talked about seed capital. Yeah, BlackRock is seeding with 10 million. We know that. But what people don't realize is like, yeah, seed capital matters. You could do a large seed and it could get you some marketing, but it's also not the only way to do this, right? Like what we've seen BlackRock do in the past with ESG ETFs is they seed with the number like 2.5 to 10 million. And then the next day, $1 billion flows into an ESG ETF from a Finnish pension fund. Right. And that is a way bigger marketing ploy to have money flow in on day one or day two than just seeding with that kind of money, right? So technically we would consider that a seed, like when I talk about it, but from a marketing perspective and from a data perspective, it's not a seed because the money technically flowed in on day one or day two. So I could see somebody doing that. I'm not saying that's likely, but it's not completely out of the question. So that's one thing to keep in mind. And then it's possible, right? Like I think there's a lot of people, for the most part, I think this isn't exactly like a gold ETF. A lot of people like to compare with a gold ETF. For the most part, if you're an individual and you want exposure to Bitcoin, like you have it. Like there's apps in every country in the world where you can download and just click buy and get exposure to Bitcoin, right? It's the institutions that don't have access, that are restricted. They can only hold securities. They have other restrictions on what they can and cannot do, that potentially they could use these things to get exposure to Bitcoin if they want it. Advisors and who have clients with tens of trillions of dollars where they could put a small allocation to this 1, 2, 3, 5% in their funds, that this makes it so much easier to do than some of the other aspects. That said, I think it's the smaller shops, smaller registered investment advisors, smaller things like that, that might be initial, like flowing money in. But what I think is Initially, yeah, it could be a big wave or it could be a letdown, but I think longer term, it's those institutions, they're not going to pile in on day one unless they've already done their due diligence and they have their money and they've already talked to Fidelity or BlackRock and are ready to put money in as soon as these go live, which is possible. A lot of the big institutions, these wirehouses, these platforms where brokers or advisors work, they can't just buy anything they want. There's like an approved list and a not approved list. And then sometimes there's like a gray area. You have to go through these hoops to actually buy it for your clients. So those platforms are not just going to put these things on the approved list on day one, right? There's due diligence that has to happen. They're going to look into all those third party that I was just talking about, the administrators, the custodians, the auditors. They want to make sure that everything is on the up and up, and they want to understand how this process is working. And if different ETFs are operating differently, somebody doing due diligence might decide we're okay with these ETFs, not these ETFs. And that could take months or years even before these things actually get onto those platforms. So the way I'm thinking about it is, yeah, it's obviously huge. I think the implications of like the SEC approving these things are massive. I think that's what the run up in price. So if I think about it logically, that would make sense because it looks like the SEC is going to prove and what it means for Bitcoin. But short term, I don't think I've seen crazy numbers about flows that are coming into this thing. We are way lower than those numbers that I've seen out there. I think the over under is around 10 billion in year one, but I wouldn't be shocked either way. I do not think we're going to get over 100 billion in the first year or two, like I've seen people talk about. To put in perspective, gold ETFs have about 100 billion in the US in total. So they've been around since 2003, 2004. So this idea that we're going to see 100 billion flow into gold ETFs in year one, I mean, into Bitcoin ETFs in year one is very unlikely. But most people seem to be around sub 10 to 14, 15 billion. Some people are in the 20s. I'm right around 10. But that said, it's the short-term stuff that I think could be a bit of a dud potentially, but I think the long-term impacts of these institutions and advisors potentially being able to allocate to this asset class if they want to is probably being underappreciated by the market, by people I've talked to in the market. I don't know about, I won't talk about pricing, but the conversation I'm hearing, everyone's focused on the short-term stuff and a little bit less on the long-term impacts here.
One question about the seeding and, the first inflows after the approval. Do the issuers, do they buy ahead of the approval, or they not allowed to buy until they get the approval? I mean, what's the process?
Yeah, so typically they'll own the asset or they'll have money in the fund like a day or two before it actually is listed in trading. So like I know for a fact some of the futures ETFs they listed on Monday and they bought on Friday. So they had the Ethereum futures in their fund on Friday. So it's not like BlackRock seeded with 10 million and they already bought all the Bitcoin and they're just waiting to put in the fund. No, the money goes into the fund and then they buy it. So there might be $10 million sitting in the account for the BlackRock fund in this case, or Bitwise has announced that it might seed with up to 200 million. There might be cash there or cash ready to go there, but they likely haven't bought Bitcoin yet.
Okay.
And people are like, oh, that means it's going to be this wave of buying potentially, but like you got to realize these are some of the most sophisticated traders in the world that are going to be executing these buying trades. Like it's not like some random person in their basement is clicking buy on Coinbase and showing their hand that they need to buy $10 million of Bitcoin. They're going to get front run, right? So these are sophisticated people getting exposure. They'll use OTC desks, what have you. But they will have to buy some amount of Bitcoin in order right before launch. So typically at the very latest, the day before, or theoretically, because Bitcoin's trading 24/7, you could do it like before they actually list. If they go live at 9:30 in the morning when the market opens, there's nothing saying that some fund out there couldn't just wait till like 8 in the morning or something that day because Bitcoin trades 24/7.
But just wanted to say something about trading 24/7. I mean, Bitcoin trades 24/7, but we've seen on chain that some addresses, some wallets that belong to OTC desks, they only trade actually Monday to Friday. You only see activity Monday to Friday.
Yeah, so I like I said, my days that I'm looking are January 8th to January 10th that I could see these 19B4 approval orders drop. So we need those approval orders, and then we need the SEC to sign off on those S1s and prospectuses, which theoretically months ago I thought it might be separated, but there's been so many meetings and so much work on those S1s, they could actually get approved the same day theoretically. But even still, once those get approved, that's when you can start acquiring the Bitcoin. So it likely, if I'm correct and the approvals are going to come sometime early next week, it will happen during the week and they'll be able to use the OTC desks.
Yeah, so the SEC also had some closed door meetings with like the NASDAQ and the CME, I guess yesterday or the day before. And so I guess there's a pattern kind of emerging of some of these NASDAQ securities amending their prospectuses to include Bitcoin as exposure. Um, and so what do you think, are they kind of front running, some of these other guys as well, I think in that regard, or?
Yeah, so I think that's also being slightly overblown. I have all these alerts, right? So anytime these filings hit the SEC and they talk about Bitcoin ETF or anything, I'm like just getting alerts for it so I can see what happens. And it's not untrue that there have been an uptick in like these mutual funds that are adding like the ability to hold Bitcoin ETFs in their fund. But that doesn't mean that much. Like a lot of this, it's just language, right? So they want to be able to do it if they want to, right? And for the most part, it's these alternative funds, hedge fund like products that are actively trading or commodity type products. It's not like you have like these $100 billion funds managed by different like large asset managers that are adding this. It's the alternative stuff. So it is smaller type funds, but it will matter. I think these ETFs, like I said, it's mutual funds and other ETFs that if they want exposure to Bitcoin, there is no easy way to do it right now because they cannot hold spot Bitcoin. And even if these ETFs are approved, they still can't do it. So the way to do it will be to buy Bitcoin. I think it might be overstated of how much assets from mutual funds are going to flow into these ETFs. I think the far bigger thing to focus on are the advisor community. That's the predominant user of ETFs. Mutual funds do use these things. They do use ETFs in general, but for the most part, they're talking about, oh, we want to be able to hold Bitcoin ETFs up to 15% of the portfolio or something like that. And they'll use it more as tactical trades, most likely. But we'll see. There will be some ETFs that are just going to hold a sliver. I mean, some mutual funds that will hold a sliver of Bitcoin ETFs. And I have seen an uptick, but I think that's slightly being overblown by some people as like some massive wave that's happening.
Okay. I'm also seeing like some rumors of like, hey, what about a middleman, right? What about someone that's going to exchange BTC ETF shares for spot BTC, right? Because technically, wouldn't that be somewhat of I guess, a tax-free transaction in the middleman space? Is there any opportunity for those guys to, to have some kind of a product as well?
It's a good question. I'm not a tax man, but I have talked to different tax people, and it's potentially possible that somebody could do that, which would matter for somebody like Grayscale if somebody really wants, because technically so I've learned all this over the last couple of months. So I've gotten really nitty gritty in the weeds on the way these structures, but Grayscale's GBTC and all these ETFs are going to be set up as what's called a grantor trust. So yes, it's an ETF wrapper, but it's going to be wrapped around it's a trust product, a grantor trust. So I don't know if you guys were paying attention back when BlackRock filed, there was all these people like, this isn't an ETF, it's a trust. And it's like, no, this is an ETF filing. So the way that works is technically, though, your shares are direct ownership of the underlying asset. So technically speaking, there could be somebody that could find a way for a fee to have a tax-free way to get underlying Bitcoin, and they would therefore take on the actual shares. I don't know of anyone doing this yet. I saw somebody tweet about this the other day, and I talked to them on in DMs. I don't know if that's possible. Part of the problem right now is that would be possible specifically for APs if they allowed in-kind creation and redemption. Right now, the only way to create and redeem shares is via cash. So we'll see what happens there. But theoretically, I think that might be possible. But again, not a tax expert, and I have not done enough due diligence. But I think based on what I've been able to understand, that might be possible, that a middleman could actually facilitate that for someone potentially. Don't don't take
Awesome.
that as a guarantee from me.
Yeah, I mean, this is new to a lot of people. We're exploring all different avenues, and we're trying to figure out like, what are the angles, where's the alpha, and so no, we appreciate your knowledge. Your knowledge is definitely a great value for a lot of people, I think, listening right now. And so I think we're going to open it up to some Q&As to see what the audience has to ask of you, James. But we've got one that already came in, and I was actually going to ask this question already as well. But thoughts about Coinbase being the custodian for a majority, right, of those ETFs. You know, despite them having some legal challenges, like, is that going to be potentially an issue for this entire thing?
Yeah, so I actually, this is one of those things that was kind of in that Matrix port note that they hinted at with the Coinbase and not being significant size and other issues with Coinbase. Look, I covered this back in August. Coinbase, if you look at anything that's filed against them, Bitcoin is not mentioned once. It's the one thing that Gary Gensler will not say is a security. I guess there's other things he won't name, whether it's a security or commodity, namely Ethereum. I personally think we can get into Ethereum a bit too if you want, Ethereum ETFs coming down the line. But so my view is they don't have an issue with anything that Coinbase is doing with Bitcoin. So yes, they have an issue with their brokerage. They think a lot of the crypto assets are securities. I tend to like kind of agree with the SEC in some of this. Like a lot of these things definitely feel and look like securities to me. I'm not a lawyer, but like, so like, it's not that crazy, but the SEC, they don't call Bitcoin a security. They have not had an issue with anything that Coinbase is doing with custodying Bitcoin. I don't think it's going to be a problem. So like they can silo off and have an issue with part of Coinbase's business without like saying the entire business is dead. So obviously it's not a great thing here for a Coinbase to be sued by their regulator, the SEC. But I don't think it matters. And we wouldn't be at this stage of negotiation and conversations. And do you really think BlackRock, the largest asset manager in the world, partnered with NASDAQ, one of the largest exchanges in the world, is partnering with Coinbase? Do you think any of these people would be getting in bed with Coinbase if they really thought it was going to be an issue? Probably not.
I had a question about like the Ripple lawsuit, which has been, kind of going on a tangent here, but like, that's been going on for a very, very long time. And, we still don't have really great clarification on what that is. They're still offering it on Coinbase, right? And, it's, what is your opinion? Like, is Ripple a security in your mind, right? Like, is Ethereum a security? How do you judge the Howey test on some of these things in your opinion?
Yeah, so I will refrain from commenting too much on Ripple. If you had asked me a couple years ago, I would have said Ripple's a security. I'm not 100%. That has security-like characteristics. It's the XRP army is going to come after me. I mean, honestly, I was rooting for them because I've seen how much overreach the SEC has gone in different parts of the crypto and security. It's honestly like you think everyone in crypto doesn't like the SEC. A lot of TradFi people don't like the things that Gary Gensler is doing in the traditional financial markets either. So I'll leave that there. That said, Ethereum, I do not think is a security. I think maybe it might have been a security with its ICO. That might have been a securities offering. Again, not a lawyer. But what I can tell you is the SEC's stance on Ethereum by implicit actions, not explicit actions, is that it is a commodity. So the CME listed Ethereum futures, and when you list a futures product, there are you have like different ways to list them. You can register them as a couple of different things, right? One of them is a securities future, one is the standard commodities future, and then there's a few others. The CME registered these with the CFTC, the SEC's sister regulator, as commodity futures. But the SEC has the ability to go in and challenge at any point and say, no, these are not commodities futures. These are securities futures. They should be registered as such. Now, we have an example right now. I think spikes. There's basically, if you know what the VIX is, it's basically measuring the volatility of the equity market using options on the SPX index. There was another competitor that was created that uses options on SPY, which is the largest, most liquid security in the market. It is the S&P 500 ETF. So rather than using the options on the index, they're going to use the options trading on the actual security. And the SEC lost in the same DC circuit that they lost to Grayscale, where they decided that the SEC was arbitrary and capricious in allowing that company to register those futures as commodities futures, and they should have been securities futures because those futures are based on a security, SPY, the S&P 500 ETF. So like there's precedent here to like say like it matters how these things are registered. And we have since seen the CME register options on those futures, micro futures, and other things on Ethereum where they did not challenge them and say they were securities futures. CFTC is blatantly calling Ethereum a commodity. They do not call them securities. Then you also have now the SEC has approved Ethereum futures ETFs. So again, Gary Gensler will not explicitly say whether Ethereum is a security or a commodity, but in their action by approving those Ethereum futures ETFs, they're implicitly accepting those Ethereum futures as commodities futures. So if they end up calling Ethereum a security, they would have to go to court. It's not impossible that the SEC and Gary Gensler wouldn't do this, but you'd likely have to delist the Ethereum futures ETFs. You'd have to delist the Ethereum futures because they are completely registered improperly and they have been illegal basically since their start. So it wouldn't just be the SEC going against the crypto industry if they call Ethereum a security, it'll be going against their sister regular CFTC and a lot of other people who are viewing and have been operating for years as though this thing is a commodity. So that's why I think we could see potential Ethereum ETFs approved this year as well, spot Ethereum ETFs, though my odds are way lower than they are for the 90% of Bitcoin. But basically the SEC, while they explicitly will not say that Ethereum is a commodity, through those actions I listed and a few others, they've implicitly accepted it as such, as far as I'm concerned, which the Bitcoin maxis, if there's any on this listening, will attack me or listen to the recording. But that's my stance here. I'm not going to get into the Howey test and how you would measure this, but I'm looking at the SEC's actions, and it looks like they just don't have the bandwidth to fight whether or not Ethereum is security or commodity. So my view since the summer, when we started hearing that the Ethereum futures ETFs were going to be approved, is that Gary Gensler and the SEC have kind of pivoted and decided, all right, we're not going to go after Bitcoin or Ethereum, but I am going to go after everything else and call it a security.
Okay, so the Ethereum ETF, you think it's going to open the door for maybe like a Sol ETF and then another altcoin ETF? And okay, so they're not going to let this get out of control.
Yeah, it's only going to be Ethereum is the only one that's on the next on the docket that could possibly be approved. Even that is not a guarantee. I think we see one in 2024 if I had to like say yes or no. But nothing else is going to happen. I mean, there's no other futures that are trading. So one of the reasons that you like the step for getting these things approved has been the futures listing on CME. There are no Solana CME futures. I have a feeling the SEC would push back hard and might force them to register as securities futures this time. So I think it would be, I don't think anything's happening without a change in administration or an act of Congress for anything other, as far as spot ETFs go, for anything other than Bitcoin or Ethereum at this point.
Okay, we have another question talking about fierce competition among ETFs trying for the largest market share due to the emergence of a primary ETF drawing significant trading volume. What are your thoughts on this situation? Like, yeah, there's going to be a bunch of ETFs. Like, who are people supposed to choose to buy their ETF from, right? Like, I mean, obviously institutions are going to have their preferred vendor, but like for normal people, like, would you say one is better than another one based on fees? Like, what is your experience?
I mean, it depends on what your focus is, right? Like I said, some of them, I don't think all of them will disclose their Bitcoin addresses. And if that's important to you, focus on the ones that do and provide proof of reserves of some sort, right? If you're worried about fees, go with the one that's offering the lowest fee, right? Like that could be something that's important. We know for a fact higher fees drag down returns significantly because while returns compound over time, so do fees. And there's a whole bunch of other issues you might have a relationship with one of these asset managers. You could focus on, I mean, you have a couple of crypto specific asset providers here. So Hashdex is nothing but crypto, Bitwise, nothing but crypto at this point, and Valkyrie, nothing but crypto at this point. So you could focus on them. You have Van Eck, who is known for operating the gold space. They've been operating heavily in crypto. Then you have Invesco, which is a large asset manager, and they've partnered with Galaxy, which is Novogratz's crypto firm. I mean, it's going to come down to the individual on how they want to do this. So we're trying to guess like where is the money going to go? And like I said, I think it's winner take most. Obviously, the ones at the top that you have to talk about are BlackRock and Fidelity. They have some massive brand name awareness for the traditional. Pretty much anyone walking around on the street might know those two names, so that could help things. But then you also have Grayscale. They already have $26 billion in GBTC, and people are used to them. There's no way to know how this is going to play out. But you just need to figure out what matters to you the most and what companies you might align with. If fees are your primary concern, look at that. Yeah, it's a very individual practice. I mean,
Yeah.
unless you're buying millions of dollars of these things, some of the stuff that institutions care about, a regular person isn't going to care about, right? Like liquidity will matter if you're putting billions, tens of millions of dollars into these things, but liquidity might not matter for somebody who's just putting a couple $100 or a couple $1,000, and they can go with a smaller provider that might not be as liquid as others. So, yeah, it's very individualized.
Yeah. Here's a loaded question. Does Bitcoin need institutions, right? Like, again, this is, Bitcoin was developed as a peer-to-peer thing. And so it seems really like the institutions need Bitcoin, then Bitcoin needs the institutions in just the general, because so many of them are basically, salivating for this asset at this point. what do you think about about that? I mean, we've got a worldwide game theory going on. We've got BRICS nations. We've got, the dollar, we just hit 34 trillion in debt. What is your kind of overall perspective on, if Bitcoin actually does need institutions?
Yeah, so it undoubtedly goes a bit against the ethos of Bitcoin. Like, there's no arguing that. The one thing I usually say when I talk to people about that is, like, this isn't forcing everyone to go the ETF wrapper. You can still self-custody. You can still use on-chain transactions with Bitcoin. Like, it's not like it's changing the actual underlying Bitcoin code here. That nothing is changing on that front. The reason that these asset managers are salivating over is they see potential demand from the advisor community, from institutions who cannot use Bitcoin the underlying way that it's built to be used. So they're going to provide a service that allows those types of people to do this to get exposure to the asset class. So you have advisors where, if you're an advisor, right, and you manage, I don't know, we'll say 100 people's assets, and it's however much money, and there's a subset of those clients who are interested in Bitcoin or have the risk tolerance to hold Bitcoin in their portfolio, and you're going to put 2% or 5%. Do you really want to set up all the processes to put 2% of a couple clients' portfolios into a Bitcoin cold wallet that you're maintaining the keys for? Like, the risk associated with that, people like discount like how institutions work. They want to offload risks and have contracts with people that are maintaining these things, so it's not completely on them, right? So the easiest way to do that is going to be these ETFs, because it's going to be those institutions that will hold this for you. So if you're an advisor, yeah, if you're thinking about putting significant client assets, or you're really hardcore into the crypto world, you might set up a situation where you're going to work with Swan or a company called OnRamp, or even Fidelity has their own process where you can custody Bitcoin directly. But if you're a traditional RIA or a broker, or somebody who you're just helping, like, you're dealing with clients and you're going to put a couple of percentage points into the portfolio, which is what I think most people are going to use these things for. Like, you don't need to worry about setting up all those other processes. You'd much rather just have something that, one, they love ETFs, they work, they're super efficient. There are very, 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 very few issues with these things. So, like, you could just click a button and have it in the way that you're used to working, or you can set up all these other processes. And again, some people will prefer to set up all those other processes because they agree with the crypto ethos and what have you. But most people are just not going to go down that route. I mean, think about, like, I'm sure, do you think either of your parents are going to ever hold and deal with Bitcoin and cold storage and send transactions right now with the way the UX and UI works? Like, I consider myself pretty tech savvy, and every time I've ever sent a transaction somewhere over a blockchain network, my heart sinks, and I'm trying to figure out if I did something correct, right? Like, there's no way my grandmother or like somebody's parents are going to do this. And this is a way to get exposure to the asset class. And perhaps some of these people are going to get a couple percent, and they're going to dive in, and then they'll become users, right? Like, this is, I think this is only a net positive as far as I'm concerned.
If you can comment, and if there's a difference in the approval process from between Grayscale, GBTC, and the others, because GBTC is more about converting to an ETF, right? So is there any difference, or are they gonna be approved like at the same time that everyone else?
It's a very good question. My base case is they will be approved at the same time as everyone else. I feel like if the SEC doesn't approve them at the same time, it could be issues. Grayscale has signaled they're expecting to be approved at the same time. That said, they're the only ones that have a unique process here, right? So they're uplisting. Everyone has official deadlines and delays right now, right? Every other filing, but Grayscale has an active 19b4 application just because the court threw out the order that denied their application in 2022. And they are also going through a slightly different process. They are uplisting GBTC and converting to an ETF. Everything else. So Hashdex is the other example. They're already a trading ETF. They were just asking for the ability. They're currently a futures ETFs, ticker DeFi. They're just trying to be able to hold spot Bitcoin. Grayscale is the odd man out here. They're a very unique situation. The SEC, if anyone is not going to be out on the first day, it could be Grayscale, just because the process is different. So that's like a potential risk, I guess I would say. My colleague and boss, Eric Balchunas, thinks that there's going to be some way that the SEC delays them slightly. At the end of the day, my base case is they are going to go with everyone else. maybe a day or two behind somebody or like that. But it's not going to be drastically meaningful that they're going to not be able to convert for like 7 months or something like that. So base case, they go on the first day. Yeah, I'll just leave it there.
Yeah.
I don't know is the base cases they'll be approved in the same day.
Yeah. Awesome. Well, I think that's a good way to kind of button this up and end it. James, we appreciate you coming on. We appreciate your knowledge. I think the audience got a lot of value of that. And so, we'd like to wish you a successful 2024. We'll be watching you on Twitter and on MSNBC or wherever you end up at. And so, yeah, any parting words for everybody for 2024?
I mean, I'm looking January 8th, January 10th for these potential approval orders. I think they'll be listed and trading within, I think the gap between approval and trading will be measured in days, not weeks, like others have said. And I think it's distinctly plausible that we could see spot Ethereum ETFs get approved this year as well. That said, Ethereum is a very different asset class. There's a whole bunch of other issues with staking versus proof of work and things like that. So my odds are nowhere near as high as they are for Bitcoin. But that's the one thing that I'm going to be looking forward to next. So I'm looking forward to covering the race, see which of these ETF issuers manage to get the assets, how the marketing campaigns go. But yeah, I'll be covering this race as it gets along, and I'll be covering the Ethereum potential spot ETFs as they come as well.
Great. And where can people find you at again on Twitter?
My handle is JSEYFF, J Safe. So my last name's Seyffart.
Okay.
So so a lot of people end up calling me Jeff because my handle looks like my name is Jeff, but James Seyffart, and it's JSEYFF. So yeah, I used to cover a lot. I used to tweet a lot more about traditional finance and regular ETFs and asset management, but for the most part, I've been pigeonholed because no one really cares when I tweet about that, and they yell at me for not talking about the crypto ETFs. But yeah.
Awesome. All right. Well, with that, we'll close this out, and happy New Year, everybody. We'll catch you next time. See ya.